Hello and welcome to our wrap-up of the week. I'm City AM editor Andy Silvester. This is City AM's news editor Rupert Hargreaves. Rupert, say hello.
Hello.
And we're going to whistle through some of the things that have happened this week, which we found particularly of interest. It's January, so let's talk about Christmas, as if we haven't already had enough of it. We've started to get reports from the retailers, the big grocers, M&S, Tesco, Sainsbury's, so on and so forth, about how their Christmas period went, the so-called golden quarter. It doesn't feel like a mixed bag, but the market's treated it like one.
The market has. I think it rewarded Sainsbury's and Tesco in its own weird way, punished M&S for not giving it a decent outlook. But M&S, I think, is the winner.
M&S is a winner of Christmas.
But it's a winner in general because it's recovered finally.
Yeah.
After a decade of recovery.
It used to be called the turnaround retailer, or the retailer embarking on its turnaround. And I edited some copy this morning to say the turned around retailer, which I don't think is really the phrasing. But yeah, I mean, and all that's been driven by two CEOs who've just put quality right at the heart of the brand. Fewer gimmicks like the sort of per-una stuff back in the day. Focusing on food, focusing on homewares that people want to buy.
And people are actually willing to spend. People are willing to spend on their quite expensive food.
Yeah, which is weird in a cost of living crisis.
Yeah.
And looking at more and more of the numbers, it seems like stuff, grocery, at-home things, food in particular, seems to still be holding up. It's the nights out and maybe that discretionary going out spend that seems to be falling.
Yes and no. I mean, some pub Nightcap also reported this week, and it said it had a record Christmas.
Yeah.
Revolution bars struggled. It is a mixed bag. People still seem to be willing to pay for quality.
Surely you're not implying that vodka revs isn't a good night out. It's a mixed bag. I think, like so much economic data at the moment, and so much economic data looking ahead to 2024, if you look at it as a bull on the economy, you can find reasons to be bullish. And if you want to see it as a bear, you can find many reasons to be bearish. So we'll park the bullish grocery spending. We'll move on to the bearish signs that you can find from the results of two recruitment companies, Hays and Robert Walters, both out this week, both talking about double-digit year-on-year decreases in fee revenue in Q4, driven by weaker job markets, basically, right, and hiring. I don't know, what's your take on where they go with the jobs market? Because obviously they said nothing to worry about here, don't worry about it, things will rebound.
Well, they are cutting jobs themselves.
Well, exactly.
They're cutting several hundred jobs.
Yeah.
I think recruiters are the ones that tend to, they're leading indicators in the stock market, which itself is a leading indicator. So they cut the jobs and they announce the troubles before everyone else. It'll be interesting to see how that plays out. Because, I mean, in some parts of the market, it still seems relatively strong, the jobs market. But is that the backward-looking figures that the government is reporting versus the forward-looking indicator that the recruitment providers might offer?
Yeah, and it'll be interesting to see what happens to average wage growth over the next sort of 6 to 9 months, because we've seen this massive uptick in average pay growth as effectively employers were forced to grapple with inflation. Employees, my mortgage is more expensive, my train's more expensive, I need more pay. As inflation starts to come down, assuming it does, some people think pretty rapidly, it'll be interesting to see whether some of that heat that's in those pay growth numbers comes out of it, or whether there's a little bit of a holdover, which itself, of course, will keep inflation higher. So it's a mess. Things are. It's just difficult to see what 2024 looks like.
There's a wild card in AI.
Yeah, of course.
If AI starts becoming a big issue, and you have productivity savings, you start laying people off for AI. There's now a serious conversation about, should that be allowed? Should there be a tax on AI? The US job numbers, US economic figures show that productivity is increasing, whereas jobs are holding. Like full-time employment is falling. So it's an interesting debate there.
And I'm an optimist about new technology, right? I don't foresee that we'll all be out of work thanks to artificial intelligence. I'd like to think robots couldn't have the sparkling conversation that we're having today. But there is always short-term displacement. Those new jobs that be created tend to take a little bit longer to filter through and to start becoming the job. In the initial sense, it is just job losses. totally different topic entirely, but an area that has been of interest this week. Dramatic industry, and in the headlines industry. The water industry in the UK, never off the headlines. Big deal-ish in the UK this week.
Yeah, well, we had... Which one should we start? Should we start the Eton College or the
Let's start with
water deal.
The big deal that probably was more significant than what was the headline.
The big deal that... I mean, it's quite interesting because it shows that people are still willing to invest. Sort of a week or a couple of weeks after that, Thames Water's valuation was marked down significantly by one of its major investors. Pennon has come out and paid 350 million or whatever it was, including debt for
South East Surrey.
So clearly there's something going on there. It just remains to be seen. I think the market kind of liked it.
Market seems to like it. I mean, I guess the one thing you can say about South East Surrey is it gets into why the industry is so wildly complicated. Stuff like sewerage and wastewater isn't in South East Surrey's world. That's still run by Thames Water. South East Surrey are just really about keeping the taps running, which, out of the many things that water companies are supposed to do, seems to be the one thing that the UK's phalanx of failing water companies have at least mostly managed to do, unless you're in Surrey and Thames Water have failed you. So I suppose in some ways it's a sensible deal to get bigger. If you've got South West Water, you've got Bournemouth Water, just to grow.
And there's an interesting debate here about public-owned companies, water companies, versus private businesses that are owned, like Thames Water, private. And Pennon has a scheme, I believe, where bill payers can actually have shares in the company, which is an interesting debate. That there's an ESG issue there, in getting your customers to invest in the company and benefiting from the company if it does have dividends.
Yeah.
Is that a good model to look at? Compared to the Thames Water one, where no one really has any idea what's going on?
Well, the one we have at the moment is leading inexorably towards Thames Water being in financial trouble for the next...
Is in financial trouble.
X number of years, right? Speaking of, very quickly, what was your favourite of these three water stories from the week? One, storm overflow draining Gloucestershire, having been continuously pumping out untreated sewage since December the 3rd. Second, Eton having to delay the start of its term time because Thames Water sewers were flooding. Or three, that the water regulator is looking for a 70 grand a year crisis communications expert.
Considering how much we'll be contacting them, the crisis communications expert, I think that's my favourite
Let's
story.
hope they answer the phone quicker than they currently do. I'm trying to think what else has really gripped the attention this week, and probably the other thing that's always bubbling along, and we'll be talking about 52 weeks a year, is around city reforms. Our chief city reporter, Charlie Conchi, had a good chat with Rachel Kent this week. She's the lawyer that was tasked with effectively breathing some new life into the UK's research environment, effectively equity analysts, right? Looking at shares. Is it good? Is it bad? Is it going to go up? Is it going down? And taking a proper look at those companies. Take us through the state of play right now, and then some of her frustrations. Well,
I think we start with her frustration, because her frustrations are, you've had all these reforms, and nothing is happening.
Well, you've had recommendations.
You've had recommendations, you've had reports, you've had politicians talking about it, and nothing is happening. So that's her frustration, explaining the state of play. All these things keep being promised that are going to bring people back to the London equity markets. They're going to start IPOs again, get companies interested, investors interested, and they're just not happening.
Yeah.
And that's the main problem that the markets have been facing.
And there's a bit of it feels sometimes like that, there's a meme of various different Spider-Men that does the rounds on Twitter from time to time, where they're all pointing at each other. And it sometimes feels like that with government regulators and the city establishment, where everybody's pointing at each other saying, well, no, you go first, you go first.
And then they'll point at the investor saying, no, you need to take more risk.
Yeah.
And the investor's saying, well, why should I?
Yeah, so it's sort of, it's not really at some point there has to be movement, and someone's going to have to be the first.
Someone has to start putting money in and leading the way, and sadly losing money, because that is part of the game. But it's about encouraging risk, and risk will lead to reforms
in time.
If money's coming into the market, then people will try and change the market for the better. If it's not,
Then you just sit there.
We had the interview with Carson Block, and the response from the city regulator. The Carson Block say you can't take away all these protections, and the city regulator say, well, if the market's dead and no one's here, what's the point of having regulations?
Yeah, what was the line? There's no point in having a perfect market if there's no one in it.
If no one's in it, yeah.
Well, I think they'll probably be having to test that thesis this year, judging by the start of things, which hasn't looked much better. Let's just touch very briefly, one last thing on the geopolitical element. This start of the year really has been, I suppose, dominated in those world headlines by what's going on in the Red Sea. I won't go into the long details of it for now from a political perspective, but from a business perspective, it creates two things, right? Geopolitical instability, and more tangibly, shipping routes are being messed around with, and we're already starting to hear the supermarket bosses saying, we're keeping an eye on it.
Yeah, disruption that was the theme of 2020, 2021, 2022 is now back in 2024. Shipping rates are going up. Shipping times are taking longer. That's the real risk. We're going to have these supply chain issues again once the economy's returned to normal, and they're going to come back to where you can't get a car for 18 months because it's taken so long to build it.
Yeah.
We're going to start seeing that again. And is that going to lead to inflation again?
Another complication in 2024 that makes it more difficult to predict. We're going to stop our predictions for 2024 because if we keep talking for any longer, we'll only be wrong. That's all from us at City AM, the newsroom. This is Rupert Hargreaves. I'm Andy Silvester. As ever, keep up to date with all the latest news, cityam.com, as well as on our app.